Good day, ladies and gentlemen. On behalf of IIFL Capital, I welcome you all to Indraprastha Gas Ltd. Third Quarter FY25 Earnings Conference Call. Today, we are pleased to have with us the senior management team of IGL, led by Mr. Kamal Kishore Chatiwal, Managing Director, Mr. Mohit Bhatia, Director Commercial, and Mr. Manjeet Singh, VP Finance. I will now hand over the floor to the management for their opening remarks, which shall be followed by a question and answer session. Thank you, and over to you, sir.
Good afternoon, ladies and gentlemen. I am Kamal Kishore Chatiwal, Managing Director of Indraprastha Gas Ltd. On behalf of the entire IGL management, I extend a very warm welcome to all of you and thank you for joining us for this conference call. Your continued support and confidence in our company drive us to achieve greater milestones. This quarter has been particularly challenging in terms of gas sourcing front. On October 16, there was a significant reduction in APM gas supply by approximately 1.08 MMSCMD, followed by another cut of around 0.8 MMSCMD in November. As a result, our total available APM gas reduced from 5.11 MMSCMD to 3.23 MMSCMD, posing a challenge for future gas procurement. However, IGL has been proactively addressing this issue. We have successfully secured additional gas volumes at competitive price from our existing suppliers, and the details are as follows. First is the additional volume of 1 MMSCMD of gas linked to Henry Hub index for a period of 5 years. Second, company has added another 0.65 MMSCMD of gas, initially linked to Henry Hub and later shifting to Brent crude, with a volume increasing to 1 MMSCMD over time. Both these agreements are competitive in the current market, with gas price of these additional volumes remaining within 38 to 40 rupees per SCM. Recently, with effect from 16th of January 2025, our domestic gas allocation has also been partially restored, bringing back approximately 1 MMSCMD out of 1.88 MMSCMD reduction that was made earlier in Q3. Further, an additional 0.5 MMSCMD from new well gas has also been allocated to IGL, and that would be from 1st of February, strengthening our total gas portfolio for the future. With these measures in place, IGL now has more than 9 MMSCMD of gas available, making us future ready. The major performance highlights for the quarter are as follows. On the sales front, we achieved an average sales volume of 9.11 MMSCMD this quarter, reflecting a 7% YOY growth. And if you see the bifurcation in the segment wise, CNG segment has grown by 6%, and PNG segment has achieved double-digit growth of 12%. And within PNG, the industrial segment has seen an impressive 16% growth, while domestic PNG has grown by 17%. The commercial segment grew by 10%. Notably, we recently crossed 1 million mark in industrial sales, a significant milestone for our company. Looking ahead, we expect to exit this financial year at 9.5 MMSCMD and anticipate that we'll be reaching in 1 year's time 10.5 MMSCMD. In our new geographical areas, we have witnessed strong double-digit YOY growth. While Delhi NCR has showed a growth of more than 5%, the outside GAs have shown an overall growth of more than 30% in both CNG and PNG segment. With this strong growth trajectory, IGL remains committed to expansion, sustainability, and delivering long-term value to its stakeholders. Now I would like to invite our Director Commercial, Shri Mohit Bhatia ji, to share his insights on our financial performance.
Thank you, Mr. Chatiwal. Good afternoon, ladies and gentlemen. I am Mohit Bhatia, Director Commercial at Indraprastha Gas Ltd. Thank you all for taking the time to join us today. I hope you had the opportunity to review our Q3 financial results, which were released yesterday on 27th of January 25. I take this opportunity to highlight our key financial and operational achievements for this quarter. As you are aware, the sales volume grew from 780 million standard cubic meter to 830 million standard cubic meter, registering a marking of around 7% Q-on-Q increase in growth. The CNG sales rose by 6% from 6.33 million per day to 6.7, and the total CNG sales in Q3 stood at 616 million standard cubic meter. As we registered good growth in Delhi NCR, our GAs also registered almost 30% plus growth in CNG. We have also witnessed an increase of CNG vehicular population with an average addition of 17,100 new and retrofitted compared to around 14,700 vehicles in the previous quarter, reflecting a 16% growth. On the PNG front, our domestic PNG sales increased by 7% year-on-year basis, 17%, I repeat. Commercial PNG growth was around 10% year-on-year basis, and industrial PNG growth is 16%. In fact, in the month of December particularly, we crossed an average of 1 million of industrial sales, all-time highest in industrial segment for IGL. With this continued focus on our volume growth, we are very confident of achieving 9.5 million of exit sales target for this current financial year 24-25, and the company is also investing heavily in new GAs to enhance the sales volumes. Financial performance and infrastructure development, I would like to just share out here that the gross turnover was 4130 crores, 6% growth on quarter over quarter. The EBITDA was 363 crores. It was down by 36% year on year, primarily due to higher gas input costs, but a lot of mitigation has been already done. The profit after tax PAT was 285 crores for this quarter as compared to 392 crores for the quarter 3 of the last year. On infrastructure front, IGL has already developed 2,280 kilometers of steel pipeline network and 26,000 plus kilometers of MDP network, and we are now providing our natural gas to almost 2.9, touching almost 3 million lakh customers, 5,000 plus industrial customers, and 6,600 commercial customers. So IGL is now operating at 899 CNG stations, serving almost over 2 million of vehicles daily. On our future outlook and diversification, apart from our organic growth, IGL is actively exploring diversification opportunities and inorganic acquisitions for future expansion. With secured gas supply now, we remain confident of achieving 9.5 million of gas this year as exit, and maintaining EBITDA in future in the range of around 7 to 8 rupees per SCM annually. So with this I conclude, and the floor is open for the question and answer Q&A session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Probal Singh from ICICI Securities. Please go ahead.
Thank you for the opportunity, sir. Very good afternoon. Just on the last bit, in fact, what Commercial Head sir said about the EBITDA guidance of 7 to 8 rupees. if I look at the cost of the new gas sources that was mentioned, just wanted your sense of how much of price increase will be required at this point of time to go from this 4.3 to, let's say, 7 rupees of EBITDA? And what kind of timeline are we looking at to sort of gradually restore margins to these levels?
I think if you see the 50% of our domestic gas has been restored. So whatever impact was there, so that has got reduced by almost 50%. If we have a 2 rupees increase per kg, then I think 2 rupees per SCM rather, then I think that should take care of us reaching back to around 7 to 8 range.
Right. But, sir, forgive me, but that would be probably for this year. The way that gas output is going, do we actually believe that, the gas allocation would now remain on this absolute figure? So therefore, whatever volume increases that we see will have to be met through alternate sources, and therefore the cost of gas on a blended basis will keep on increasing as we go along?
So our belief is that the domestic gas production per se will not go down. So that will remain, rather increase. Only thing is that the nomenclature, that new well gas, whatever APM cut would be there, would be replaced by new well gas, which is around 20% costlier than the APM.
So on an average, is blended gas cost? Sorry, sir, go ahead.
Yeah. So what I would say is that the total, we would say APM and new well gas, if we take it as, say today we have 4.26, so that I think would continue to remain in this range only.
Right. So therefore, is it fair to therefore assume, sir, that around a 15% blended increase in gas cost can easily be passed on an annualized basis because the cost of everything keeps going up? Is that how we are looking to sort of keep improving?
So the weightage of that is only, you can say 20% or so. So 70 to 80% would again be APM. And we believe that given that now ONGC has also appointed a technical service provider, I think the production, especially keeping the fact that CGD is a priority sector, so that we believe that this value would remain.
Got it, sir. The second question, if I may, sir, was on the 17,100 plus number mentioned of new vehicles and retrofit. I just wanted to understand, sir, the demand from commercial vehicles, if it is there in and around the NCR, is that reported under the commercial segment or that would still form part of the CNG segment? Is it possible to therefore put a number on what percentage it is of total sales today?
Actually, there was a huge increase from the private vehicle space in the CNG segment in Delhi NCR that we saw, especially in the month of Diwali. There was a huge increase. So we had around 24,000 conversion in the month of October, and majorly contributed by the PV segment, passenger vehicle segment. And the commercial again continues because of the Grab operation in the Delhi NCR region. It's not only in Delhi, but it's the entire NCR that is covered. So that has also accelerated the conversion, I would say.
In fact, just to add, regarding this April to November, if I recall, there was a substantial growth in addition of CNG vehicles, particularly by 46%.
Okay.
Mr. Probal, does
That's
that
right. So we see that the continued growth in commercial space also due to the Grab and environmental concern basically.
Understood, sir. Thank you so much. I'll come back if I have more questions. Thank you so much.
Thank you. The next question is from the line of Yogesh Patil from Dolat Capital. Please go ahead.
Thanks for taking my question, sir, and congratulations for the good set of numbers. Sir, as you mentioned in the initial remark that you are confident to achieve 9.5 MMSCMD exit sales volume in FY25. So could you please share what is the current sales volume? Because as per our calculations, it suggests you require closer to 7% kind of a sequential volume growth. Then only you can achieve the 9.5 MMSCMD from the current level of 9.11 MMSCMD. Could you please throw some light what will lead to the 9.5 MMSCMD exit sales volume in FY25?
Actually, we were growing very strong in the third quarter. The initial 15 days were very, very strong before this cut. Now, what happened after the cut was that we had to source this 2 million gas immediately from the market. And unfortunately, during that period, the spot prices were very, very high, around $14-15 per MMBTU. So whatever sourcing we were doing was at a very high level. I mean, which was not, I think, sustainable for us to pass on immediately. So we had to reduce deliberately the growth in some of our GAs just to cater to our existing customers. So that was, so seeing that kind of volumes, because 55 lakh kg was the number that we touched during that October month. And subsequently, we got it up below 50. So we are confident that 7-8% growth in these 3 months is very much possible, and the 15-20 days when we have restored our original supplies. So that has again we are back to those levels which we were achieving before the supply cut.
So the current sales volumes are much closer to the 9.5 MMSCMD. Is that a correct understanding, sir?
Yes, that is correct.
Okay. And sir, if you could provide some volume growth guidance for the FY26 and 27, if possible.
You see, 26, because the visibility is there in the existing, in case we are able to acquire 1 or 2 GAs more, so then that will change. But the current scenario, I think 1 million, 10 to 11% growth we are clearly seeing, especially given that our new GAs are also now adding to that. So I think 1 million we will be adding in the next 2 years, every year, 1 million each.
And lastly, on gas.
Just to add, see, if we dissect it on segment wise also, see, currently our GAs are also growing around 30%, all the handsome double digit, and contributing to almost 1/3 of the share. Plus Delhi NCR also is growing. In fact, NCR is growing very good, around 12 to 13%. So this is on the CNG segment, but particularly if you see PNG, we are adding almost 3 lakh customers year-on-year basis, which almost is contributing to a growth of 15-16% in domestic PNG. And apart from that, industrial and commercial, we are also adding around 1,200 customers year-on-year basis. So that is also amounting to around 10 to 12. So I find it very confident that we can easily grow on the numbers.
And lastly, sir, if you could share the gas sourcing details for only CNG right now and how it will change considering your new gas sourcing contracts in medium term. If you could throw some light on this.
Actually, right now we are getting roughly 51% is APM allocation, which is the firm allocation. In addition to that, some new well gas plus HPHT would be another 15 to 20%. We feel that given that 0.5 has been allocated, so 7-8% kind of value would come from there, and rest 40% would be sourced from RLNG, for which we have the existing contracts are. We feel that we will be able to sell at those levels.
Thanks a lot, sir.
Sourcing is very attractive that we can sell with the existing price.
Thank you. The next question is from the line of Pratyush Kamal from Incred Equities. Please go ahead.
Hello, sir. I'm audible?
Yes, sir.
Yes, please go ahead.
Yeah. So one question which I have is regarding your current tax structure, because there has been a lot of noise about, bringing natural gas into the GST regime. So how does the current tax structure looks like currently in natural gas? So you get the gas from GAIL. So does it attract additional VAT, and do you get any input credit for that? Because since I think it would be interest-rate transfer, you might not be getting that. So what's your comment on this aspect?
I think the major challenge for the entire sector is the 15% Gujarat VAT that is levied on any gas that lands in Gujarat. So this includes the imported RLNG as well as the domestic APM gas, because it lands at Hazira where the purification, etc. is being done. So the 15% is I think a big number. So that is the major cause of concern. Once the gas is in GST, so that will be a big relief for the sector. Additionally, every state has a different kind of VAT structure. And the main challenge is in states like UP, where, the input is 10% and you don't get input credit on the output, and output is at 12.5% VAT. In addition to that, the excise of 14% remains. So these are the major tax structure. Plus, in case we are sourcing, in high seas, then the 2% GST is applicable.
Understood, sir. And just to clarify this, so that 15% is being paid by the GAIL when it gets the gas from Petronet, and when the GAIL gives you the gas, then you'll have to pay additional 2% VAT because of this interstate transfer. Am I correct, or is it something different?
Yeah, that is correct.
Okay. So now, sir, post IGL, when it goes to customer, what are the different VAT which are put on CNG and PNG for Delhi specifically, and what's the additional cost which is involved in the compression, and is it included in GST? Because then you might be getting the input credit for that GST which you would have put into the compression, right? So, what's your take on that?
I think I will ask Manjeet to clarify this.
In Delhi, there is no VAT as on date on sales of CNG. Even there is no VAT on purchase of natural gas used for CNG. Regarding your second question on GST, right now the compression charges what we are paying GST on the services that we are using, for which we are not getting any input credit because CNG is still not under the GST regime. So once the GST comes into picture on natural gas, we'll get the benefit of all the GST we are paying on our input for compression and other activities.
And PNG is at 5%.
PNG in Delhi is at 5% right now. The input of VAT is also 5%, but that is convertible. So net impact is a 5% tax on output side that we pay.
Understood. And so what's the formula of the Henry Hub and Brent link which you have made?
So the formula, I think it is a commercial arrangement between mutual parties, so that would be difficult to share. But it is very, very attractive as compared to the industry. That is all we can say.
Understood, sir. No, thanks, sir.
Thank you. The next question is from the line of Amit Murarka from Axis Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity. So, just wanted to check, has the drag from DTC buses now stopped, or is that still impacting your numbers in Delhi?
No, it is still under progress. So what we can say is 9 months this has impacted the sales. Otherwise, we would have grown. Delhi was almost flat, maybe 3% growth. But otherwise, if you leave aside the DTC, it has grown by 6%. So the impact is still being felt because I think that 40% buses are still there.
Right. And also, I missed the comment on price hike. I think you mentioned the 2 rupee SCM is needed to maybe go back to the 7 to 8 rupee range. But what is the thought process now on kind of making these price adjustments? Is it basically the election factor, or is there anything else? Could just throw some light on that.
Actually, we balance both the growth as well as the margin. So what I would say is that because of the sourcing was so sudden, so we had to source and then the adjustment, because we don't want to shock the customer and into believing that this fuel is not very reliable fuel. So that's the dilemma for us, and Delhi being the largest market, and so any response from our side has to be very calibrated. So we'll take a call. And we have taken some price hikes other than Delhi to the extent of 4 rupees in some of the GAs.
Right. No, I understand for December, but now I think the sourcing is more or less now clear and maybe stabilized. So I believe you'll have a good sense of your cost structure now. So just wanted to understand, like, when do you think you can go back to that 7 rupee plus margin range now?
I think in this quarter we are hopeful that we will be in that range.
In Q4, you mean?
Q4.
Okay, sure. And also on the capex for next year, will it be in the 13,000 crore range?
Yes, it will be in the 13 to 15,000 crore because we are looking at some of the diversification initiatives also. So if they materialize in this quarter, then I think it may even exceed 13 to 15,000 that we have projected.
Okay. And sorry, out of the total CNG stations, how many are in Delhi right now?
Delhi is around 500.
Okay.
So we have around 400 petrol diesel dispensing stations and 500 is CNG.
No. What I meant was in Delhi, how many stations are there out of the total about 900 that you have?
In Delhi, there are 400 stations which are petrol diesel stations and 500 is the number for CNG. Out of our 900, 500 is in Delhi.
So we have more stations than the petrol pump.
What I'm saying is Delhi has more CNG stations than petrol and diesel.
Oh, okay, like that. Okay, sure. Got it. Thank you.
Thank you. The next question is
Hello.
from the line of... Yes, sir.
Okay. Please go ahead.
Yes. The next question is from the line of Nitin Tiwari from Phillip Capital. Please go ahead.
Hello.
Hello. Good evening, sir. Thanks for the opportunity. Can you hear me? Am I audible?
Yeah, please.
Yeah, you are audible.
Yeah, sure, sir. Thank you. So, sir, actually, you've touched on the gas sourcing in bits and pieces in your introductory remarks. But just to put things in perspective, can you help us in terms of, putting a like-to-like comparison between third quarter and now in terms of what are the sources of gas that we have and what we had in third quarter and the volume that we are getting from those sources? And also, additionally, if you can give us a breakup of LNG contracts you have. Because I suppose you already had a couple of LNG contracts which were long-term in nature in the third quarter as well. And have you contracted anything on top of that? And whether that's Hindi or Brent linked. So just a couple of details on that side. That would be my first question, sir.
You see, if we look at the company-wise, rather than breaking into, you are aware that CNG is 51% and PNG is 105%. But if you look at the company-wide, out of 9.11, approximately 47% is APM, new well gas, APM as well, APM, non-APM, new well gas. So you can say 47%, that is 4.26 MMSCMD. That is available, and our balance RLNG that makes up around 9.1.
This is for the third quarter.
Yeah, this is for the current portfolio as of now.
All right, 47 and 53% is the breakup, right? All right, and this has now this allocation has increased. The 47% has now increased. That's what has happened.
This is after the increase. Because before the increase, we were getting 3.23. Now that has increased to 4.23. Okay, so 1 million has increased. So 10% has increased, and from 38%, it has the CNG has gone to 51%. So company-wide, if you see around, you can say 47-48% is APM, non-APM, as well as the new well gas.
Okay.
Because new well gas is the same, but the pricing is different, slightly higher.
Mm-hmm.
And HPHT is, now if you include HPHT also, so you can say that roughly 50-50 is our mix. that 50% is domestic gas, because HPHT anyway is domestic gas. So 50% is imported.
So 47% APM and non-APM, 3% HPHT. Now, when we come to LNG, so what is the breakup of LNG in terms of volume and, contracts in terms of index linking? So how much of the volume is Henry Hub? How much?
Two-third is our, presently, two-third is Henry Hub linked and one-third is combined JCC, Brent, or rather Brent is slightly more. Brent, JCC, JKM, all those. So two-third is linked to Henry Hub gas linked and then one-third is oil linked.
And you mentioned that there is a contract that you have changed from Henry Hub to Brent. Why would that be?
No, it has not changed. It is basically 5-year contract. So initial 2 years would be on Henry Hub and going from 27 onwards that will switch to Brent. So it was a mixed kind of a thing.
Understood. So 1 MMS CMD that you mentioned at the beginning, that is a new contract that we have signed over and above what we had in third quarter.
Yes, and the second contract also is a new contract. So since we already have a portfolio of Henry Hub linked gas and our Brent linked contract, long-term RAS gas contract is expiring in 27. So that is why we are switching to some of the Brent. So that the mix is of the 50% RLNG, the mix is 50-50.
Understood. Great. And sir, secondly, on basically gas sales, if you can just help us with the breakup of sales in percentage terms between NCT, then NCR and other GA, and what was their respective growth numbers. And I would just push in an additional number to that. I mean, just for clarification. So the bulk sales that we are doing, for which we are supplying APM gas to Haryana Gas, all of that APM supply is still coming as APM, or there also there has been a shift in terms of APM plus NWG or something like that. That would be all for me.
There has been no shift in that gas because it is basically court monitored, so or rather court mandated. So there has been no change in that. Number one. Okay. Second is that 67-68% is our Delhi, and around only the Delhi figure is that. Around 15 odd percent is, or rather close to 20%. If I include Gurgaon also, close to 20% would be the NCR regions, and balance 12% would be outside NCR.
Right, and Delhi grew at 3% and NCR at 7%.
NCR is growing at around 15%, and outside Delhi NCR is around 30%.
30%.
So Delhi inclusive of if we take DTC thing also, so Delhi is growing at around 2%. But if we offset DTC volume, then it is growing at around 6 to 7%.
Understood, sir. That's very helpful, sir. Thank you so much.
Thank you. The next question is from the line of Vardarajan Shivshankaran from Antique Stock Broking. Please go ahead.
I'm on the call right now.
Yeah, thanks for the opportunity, sir. So, on the APM allocation part, have you been given any kind of an assurance of no future cuts, or do we expect one more round of cuts as and when, the next review happens, which I believe is for 15?
Actually, we have received just the communication that this is our new allocation. Now, I don't know whether anybody can give an assurance kind of a thing. So it will be very difficult for anybody because it is dependent on the domestic production from those fields. And we all know that the production over time tends to go down unless we have some intervention. So we don't have any such communication that it will not go down further.
On the new well gas, how much are we getting today, and is it being allocated on a proportionate basis or is it a different basis?
It is now on the proportionate basis because in between what they have done was they have invited expression of interest, but now that has been done away with, and they will be allocating based on proportion of their consumption. And 25 for any gas, because our consumption of CNG And this is basically going to priority sector, CNG transport, and since our share is around 25%, so we expect to get around 25% of NWG.
As of now, are you getting the 25% or is it lower?
Yes, the new communication that has come from the 16th would be applicable. We will be getting that.
In which case, like, the new contract you entered into, would that become kind of surplus volume or redundant?
No. They will not become redundant, but because they are very competitive, so they are basically lower than the existing some of the existing contracts. So what we can think of doing is, trading those excess volumes on the exchange.
Sure. And the last question is, the non-Delhi GAs, you are saying are growing currently at what rate?
30%.
30%.
Outside Delhi NCR, they are growing at 30%.
Thanks a lot, sir.
Thank you. The next question is from the line of S. Ramesh from Nirmal Bang Equities. Please go ahead.
Thank you and good evening. So just to understand some of the operating details of this APM gas and the new well gas. So whatever you mentioned in terms of the increase in APM gas allocation from 3.23 to 4.23, that is still at the APM gas ceiling price, right?
Yes, that is at ceiling price.
Yeah, and secondly, when you talk about the new well gas price, ONGC is eligible for 20% premium on that 10% slope-based formula. So do you have to pay that slope-based formula plus that 20% premium?
Yes, the price of APM gas, other than the ceiling, is intimated by PPAC on monthly basis. So currently that is at 7.3. So on that we get 20%.
That's a 10% slope, but ONGC is entitled to get 20% premium on that. So in terms of the pricing of the gas sold by ONGC, the question is whether it's just at that 10% slope or there is a markup of 20% you have to pay as gas cost for the new well gas.
20% markup is applicable.
Okay. Second thing is, can you give us the volume in MMSCMD from the new GAs as of third quarter and what you are doing now in fourth quarter? Is that possible?
See, our new GAs in particularly, if we just segregate Delhi NCR thing, and around CNG, its volume is around 0.6 to 0.7 millions per day, and domestic front it is around 2 lakhs, and industrial and commercial it's picking up, so that needs to be further enhanced.
And can you give us the CNG number for third quarter? What was the run rate in new GAs?
CNG numbers for?
For the new GAs in 3Q.
So it is around 0.6 to 0.7 only.
So it is remaining steady. Okay. Now in terms of the capex in new GAs and the recovery of...
So this was for the third quarter only, which is growing by around 30%.
On a quarter-on-quarter basis?
On quarter-on-over-quarter, last year. Yearly basis, year-on-year basis.
Okay. So if you're looking at the capex which you already done in the new GAs and whatever is pending, in terms of the recovery of interest and depreciation, when do you see that happen at PBT level? At what volume and what is the timeline for that to be positive at PBT level for the new GAs?
Most of the GAs have come positive other than one or two with this price hike, I think, except for the very new GA of Banda, Mahoba, Chitrakoot. The other GAs are more or less at break-even level. Only the depreciation is slightly higher, even considering that they are now coming into positive.
So can you give us some sense of what will be the increase in interest and depreciation over the next 2 years from what you have reported as of now for year to date?
You see, interest in any case is almost zero. The depreciation is one that is there.
So the 120 crore depreciation we reported in this quarter. So this is growing almost year-on-year basis 10%, of 135, 140 crore we can expect next year same time.
Per quarter. Okay. One last thought. So in terms of the LNG retailing and compressed biogas initiatives and the gas meter initiative, can you give us some sense of where these initiatives are going? When do you expect to make some investments and see some commercial results from these projects?
You see, the gas meter is under almost now the installation is nearing. So by April end, so the production will be starting there. I mean, it is in advanced stage, I can say. LNG, one of the stations is under progress, under commissioning or has been commissioned, and the sales are very encouraging there. Every day they are selling around 10,000 per SCM. So that is the kind of sale. And we are 3 more stations, LNG stations, 2 in NCR, 1 in Rewari. They are in advanced stage of construction. And 1 is exclusively for Concor, and that will be used for their internal vehicle movement. The CBG is also picking up that our own plant, we have 10 plants. They are, 5, 6, we have acquired the land and the job is under progress there. So we expect that in another 5, 6 months, one of the unit would get commissioned, and subsequently every 2, 3 months, we'll see commissioning of the others. So 10 plants for which we have planned, they are in advanced stage in the sense that we have now got land in those 10 locations. In addition to that, the third party or the LOI holders of our CBG units, so that is also progressing very well, and we have in our Muzaffarnagar and Noida, Greater Noida, Hapur, these GAs, we are getting the supplies from CBG.
So if I may squeeze in the last question on the CBG business, what is the final capex to do, and what is the kind of volume of CBG you can source, and what price?
You see, capex, since it is on a JV mode, and that too debt equity, so company level capex will not be very, very high. Because right now only 50 crores kind of numbers is there. But the benefit is that this is the cheapest gas that is available. 10% cheaper than the APM also, blended cost, I would say. So we are, but the challenge remains that the land availability, because technology is not an issue, only the land availability and the feedstock. So those are the key challenges which are making the growth slightly more challenging. But we expect to ramp it up fast now that we have got land in some of the cases. So the capex totally would not be in excess of 200-300 crores.
Okay, thank you very much and wish you all the best.
Thank you. The next question is from the line of Apurva Sharma from Helios Capital. Please go ahead. Apurva, I would request you to...
Hello, am I audible?
Yes.
Yeah, I just wanted to understand what are the steps that have been taken by the company to resolve issues regarding in the remaining parts of Gurgaon. No, we understand the pricing was the main issue between IGL and other parties. So I just wanted your thoughts, given the importance.
Actually, pricing is not the main issue. There was no question, no talk of pricing. Since it is a sub judice matter, so I think it will not be fair on our part to comment on anything. And as you are aware, the case is in FTEL, and the technical member there is yet to be appointed, due to which there is some delay.
Yeah, that's better. I think matter is already sub judice, and it will be difficult for us to comment right now.
Okay. Another thing is around 1/3 area of total GA of Gurgaon, right? IG has. So what has been the expansion in both CNG and PNG that has been done by the company in this territory?